The European Central Bank has announced that it has successfully fixed an unprecedented outage in its payment system, which had left transactions potentially worth trillions of euros in limbo for most of the day. The malfunction of the Target 2 system, crucial for settling over 3 trillion euros in daily payments and financial trades, prevented transactions between banks from being processed, while regular bank customers did not feel the impact of the interruption. It raised concerns about the transactions between lenders that are essential for the Eurozone's economic stability. The outage lasted approximately 7 hours. Data from mortgage lender Nationwide has noted that British house prices increased by 0.4% in February compared to January, exceeding economics expectations of a 0.2% rise. Year-on-year, prices grew by 3.9%, slightly down from January's 4.1% increase. The uptick reflects a surge in demand as buyers rush to take advantage of a tax break set to expire at the end of March. Falling borrowing costs have also supported the market. Analysts predict further price growth of 3.5% in 2025 and 4% in 2026, driven by expected Bank of England rate cuts. Preliminary data from the Federal Statistics Office has revealed that German inflation remains unchanged at 2.8% in February, matching January's rate and defying forecasts of a slight slowdown. Analysts had expected a 2.7% rise. The data comes amid economic challenges, including high energy costs, elevated interest rates, and global competition, which have weighed on Germany's economy after 2 consecutive years of contraction. EU harmonized data released by France Statistics Authority has reported that French inflation rate fell sharply to 0.9% in February, its lowest level since February 2021. The drop from 1.8% in January was driven by falling energy prices and slower service sector inflation, and came in well below economics expectations of 1.5%. The decline marks the first time since September that annual inflation has fallen in France and keeps it below the European Central Bank's 2% target for the 6th consecutive month. Economists attribute the cooling inflation to lower regulated electricity prices and a broader trend of disinflation. Final data from the Statistics Office has reported that Sweden's economy grew 0.8% in the first quarter of 2024, up from the previous quarter, and expanded 2.4% year-on-year. Full-year growth reached 1%, exceeding earlier estimates. Strong exports, business investment, and household spending drove the recovery, though consumer confidence remains low. The central bank, which has cut rates 6 times since last spring, signaled that rates may have bottomed out at 2.25%. Despite the uptick, uncertainty persists due to weak retail sales, geopolitical risks, and rising inflation, which could delay further rate cuts.